Hello, everyone. Welcome back to the channel. Today we have a special guest revisiting us today, and I'm so excited. This is Mr. Carlo Turner from the Crown Estate Opportunity Fund,
Mm,
affectionately known as the CEO Fund. And we are
absolutely.
just so
Yes.
grateful that he has returned to grace us with his presence and his knowledge and his wisdom. Welcome,
It's an
Carlo.
honor to be here. It's an honor. Honor to be here. Thank you, Dr. Cashflow, Dee. It's very pleasurable to be here. Looking forward to it and excited about what we are going to talk about today. It
Mm,
is a wonderful diamond in this industry of understanding. So go right ahead, please. Looking
Absolutely,
forward to it.
absolutely. So today we're going to just touch on some educational notes as to how whole life insurance can benefit those in the mortgage note space, right? And so my first question for you is, can you explain to us the benefits of using whole life as a funding vehicle for mortgage notes?
Oh, absolutely. In fact, I'll start by telling a little story. I had an investor that I sat down with who wanted to get a higher return on the money that he was getting. And he had very limited amount of money to invest. And so the amount was literally less than $12,000. And so I declined to do business with him because in assessing his circumstances, he would need that money to continue on his survival in terms of paying bills and groceries and what have you, that type of thing. However, in talking with him, I ran the gamut of some other ideas because I know a little bit about him. I said, tell me about your investment portfolio. And he says, well, I don't have much in stock. I don't have much in treasury bills. He said, all I have is a whole life insurance policy. I said,
Mm,
that's fascinating. You have a whole life insurance policy. I said, how much is in the whole life insurance policy? And he topped off some numbers that were in six-figure numbers, very, very high six-figure numbers. I said, are you aware that you can literally invest with me and gain a double profit margin on your money? In other words, your money will work twice as hard for you and as secure. What if I were to tell you you can do that using your insurance policy? And he said, Carlo, I'm definitely interested. Tell me what can I do? Do I have to sell the policy? I said, absolutely not. Why would you sell the
mm,
policy? You need
mm.
that for your
Absolutely.
next generation, and your family would have, God forbid, something happen to you. Your family continues on to survive, or you have a serious medical condition happen. The insurance policy will be able to assist you with hospitalization. I said, but the beautiful thing about this is that you can borrow against the insurance policy for small fees. And the beauty of this is you really don't even have to pay the money back. They will not require you to pay the money back. They'll take it out, God forbid, something should happen to you. Now you're welcome to pay it back.
I'm sure
But
that was
here's the
music
thing.
to his ears,
He
huh?
was he was absolutely ecstatic. And he told me, he said, I'm willing to do that. I said, based on your insurance policy, what you're doing right now, you literally can borrow $70,000 from that whole life insurance policy and invest with us.
Mm,
And he said, Carlo, I'd love to do that. He said, but will that affect my policy? Now, this is the benefit, your question. One of the significant benefits of whole life insurance policy is that when you borrow against the insurance policy, the 100% principal is not deducted.
mm,
The 100% principal stays fully intact and continue to collect compounding interest. Right now, whole life insurance policies are paying roughly about six. In some cases, if you have a stellar policy, 6.5% interest, compounding interest. So he could borrow that 70,000 and invest with me and invest in our fund, which I made him an offer. And I said, just to try this out, why don't you try this for 1 year? We're prepared to offer you 7% interest on that 70,000. It will be just as secure as your insurance policy. You will not have to worry. The only difference with us is you'll get the monthly disbursement, monthly dividends back to whatever bank location you want us to send it to. So, how does this look, Dee? Here's another benefit. Most investors don't even think about this.
mm.
Usually, when you see on YouTube, you see someone talking about taking their borrow funds from their insurance policy or go buy a Mercedes or go buy a new car, something like that. Very seldom do you hear someone talking about borrowing against the insurance policy to then get multiplicity on the money from the
Absolutely.
policy.
Hmm.
We used to call these a butterfly avenue of investment. Money making on this side, where money comes from that to put in something else that is also making money. Now you have the double fly or
Mm,
benefit or profit margin or profit structure. And it's absolutely beautiful. So in essence, he's getting 6.5 compounding interest on his insurance policy while he takes a $70,000 loan against that policy that he doesn't even really pay back, invests with us for 1 year at 7% interest, paid interest only for 1 year, getting monthly disbursements. And I told him at the end of the year, you can take the money out. You will have made 7% on that money. You can do what you want with it because you do not have to pay back the insurance policy. They'll take it out at the end of term or a circumstance, God forbid, should happen. In the interim, you have that money. And I said, if you want to, then you can take the 7% on the 70,000
right.
and then reinvest that back with us. At that point, if you want to do that, I'll give you a 2 year deal at 8% interest. Same terms. I said, only stipulation I may want, we may require to pay you quarterly because it's extreme difficulty on the books for monthly payments, but we can do it. We can certainly handle it. So this is one of the benefits of the insurance policy that I love about it, uh, Dr. Cashflow, because it offers the investor an opportunity to invest, even though they're not liquid. Many
Exactly.
investors that I talk to many times that are interested in the mortgage loan industry, sometimes they're just not liquid. And when I ask an investor, well, how much can you see yourself investing into this particular type of opportunity? Well, Carlo, I'm not liquid right now. Well, maybe you are, maybe you aren't. Tell me about your investment portfolio. You hear the whole terms: mutual funds, CDs, stocks, bonds, annuities, 401ks, Roths, etc.
Hmm.
And then someone goes on to say, well, I got this whole life insurance policy, but I don't really consider that investment. I don't know why not, sir.
Right. That's cash.
You're generating revenue, profit margin for your life
Right.
down the road, but it's accumulating and it is compounding.
Yes.
But the beauty of it is you can borrow it. And here's another benefit that I really love. This is what really seals the confidence in an investor to utilize their whole life insurance policy, Didi.
Mm.
It is tax free.
Yes, yes, yes. Yes, it is. And that lines up with my second question. So I'm so
Absolutely
excited you
brilliant.
touched on that. So let me go ahead and ask my second question. But before I do that, what I like to call it is giving your dollar two jobs, right? Your butterfly.
It's cute. That's
I
very
like
cute.
to give my money
Very
two
cute.
jobs, right?
Mhm,
Because
mhm. In other words, what you're
uninterrupted
saying is you
compounding
want your
and
money to
then,
work.
hmm,
Absolutely. You want your money to work twice as hard.
exactly.
There's a dear friend I have. He's very successful, very wealthy guy, very successful gentleman. We have coffee every now and then, and he always says to me, "I'd rather my money work than I work."
Exactly. I don't want the two jobs. Just give it to the
he's,
dollar.
and he tells me all the time. He said, "Carlo, I have a lot of employees,
Yes.
millions of them
Wow.
that work for me."
Exactly.
And he said, "I get returned, and they work 24/7, my friend. They don't sleep."
Exactly.
It's absolutely beautiful. It's
Okay.
absolutely beautiful. But yes, insurance policies are
So
one of the secret,
sacred.
stellar opportunities for investors to utilize, particularly to get in the real estate industry, and particularly as it pertains to real estate,
Absolutely.
buying or owning mortgage loans.
Exactly. And when we couple those two hidden gems,
Mhm.
whole life insurance, properly structured whole life insurance, I should say, and
Absolutely.
with the mortgage notes, we have the best of both worlds. It's like, where,
Absolutely.
where was this world all this time? So my second
Absolutely.
question for you, Mr. Carlo, is
Hmm.
what are the tax advantages of using whole life insurance to invest in mortgage notes?
Well, you obviously, as soon as you draw the funds from the policy, you're not in any type of tax consequence whatsoever, ever. That
Exactly.
money, once it's borrowed, because it is a loan, let's keep that in mind. It is being lent to you from your insurance provider
Hmm.
against the collateral of monies accumulating in the insurance policy.
Right.
So it is a loan. And as soon as you abstract that, you're not subject to any tax consequences whatsoever.
Hmm.
And this can be a tremendous benefit for you. Now, I'm not a tax advisor. I want to be clear about that. I'm not a CPA.
No, we're
I
not.
don't I don't propose in any way to be a tax expert, but I do have a CPA that works with us, and I do deal with CPAs as clients and tax accountants, bookkeepers, etc. They marvel at this opportunity. In
Mm.
fact, they salivate about an opportunity like this because most of your time when you invest, you're going to pay capital gains. Now, the capital gains is only derived from the profit structure, not from the borrowed funds. So in the same example I gave earlier, 70,000, this investor borrows 70,000 against his insurance policy. The interest of 7%, that is capital gains. He will have to pay tax on that. If he has a good accountant, he probably will be able to in some way compensate for some of the tax obligation. However, the benefit for him is that that fund, when they're borrowed, is tax exempt. The only thing he has to pay is on the profit, which is the interest that he's being generated for, and he pays the capital gains on that. When an investor finds out that the money that they have been putting into an insurance policy can then be utilized to make a double profit impact for their benefit,
Exactly.
it is eye-opening. I cannot tell you the body language that I've seen every time I've talked to an investor
Mhm.
across from the table. Immediately, the only thing they say to me, Carlo, where's the contract I'd like to sign?
Absolutely. It's that eye-opening, like the veil has been removed.
Exactly. And of course, in my industry, buying mortgage notes, you have even a tighter benefit than the insurance policy.
Right.
Because when they invest with us, you have the equity in the house, you know where the house is. And then, of course, there's equity in the mortgage note because we buy the mortgage notes at discount. So you have this double collateralization of safety and security. But in addition to that,
Mhm.
now you're making interest on those funds, which is absolutely fantastic. And so I want to tell all of your viewers, anyone that is particularly starting out investing, you should give a look. If you have an insurance policy, and this is fantastic because this is exactly what it is. An investor can invest into an insurance policy roughly after about 6 months. There's some that you can borrow against immediately. I don't want to get into that. I'm not an insurance person,
Right.
but on the other side of it, as a professional investor and a manager of professional investors' funds or retirees that are retiring, managing their funds, their portfolios, as it pertains to coming into the mortgage industry, it just gives a person so much satisfaction. One, they do not have to use liquid funds at all. They don't have to touch their treasury bill. They don't have to touch stocks. They don't have to touch their CDs. which when you tech worth that or remove it, is liquid cash. You no longer get the benefit of the CD. Any of those other investments, now there are some exceptions. For example, you can borrow against stocks, you can borrow against treasury bills, you can borrow against a CD. If you go to your commercial bank, you probably can borrow it, but you're not getting compounding interest on those investments, and you're getting very low returns on those investments because they're conservative. However, now that you can borrow against it and get 7%, 8% investing with someone like us, the CEO fund, all I can say to your viewers, give me a call.
And your money is still growing.
Exactly.
Best of both worlds.
Exactly.
All right,
Exactly.
so Mr. Carlo, last
Yes.
question here. When you couple whole life insurance and mortgage notes, what is the long-term financial growth and wealth preservation strategies that you could share with us? Maybe one or two.
Well, one thing, obviously, this is a building wealth condition, or I would say strategy is a better word to use. It is a wealth builder, and when I say wealth builder, I do mean it. You know, there's a scripture I read in the Bible. The scripture I read is that He, meaning God, gives power to make wealth. A lot of people are making money, Didi.
Mhm.
A lot of people are making a profit in this life, in some capacity as an investor, but building wealth, making wealth, that is an entirely different conversation. Whole life insurance policies build wealth. All right. You can own several of them. You can own one on yourself, one on your wife, so to speak, or your husband, so to speak. You can own them on your children. You can even own them on your grandchildren.
Yes.
All right. There's a colleague we both know talking about a story of a insurance company. I'm sorry, a corporation. I believe the company was Ford, if I'm not mistaken. I don't know if they still do it, but they used to take out insurance policies on each employee that they hired. The employee would have to give the consent to it, but of course there was some incentive for them doing that because some of that money would be invested back into their retirement, so to speak. The company asset would build up. So here's the thing: when you buy the insurance policy, your net worth begins to climb. Net worth, all right? Talking about building wealth, it begins to climb. Now you then borrow against that insurance policy and buy a mortgage note. Your net worth has doubled to some degree. All right, maybe 25%, maybe 35%, depending on your scenario in your personal life with the insurance policy. But the beauty of it is now that interest is coming and coming again. You could literally, with combinations and strategies using the mortgage notes, multiply that money again. That gets into a whole nother complexity. We do things like that as fund managers. We know how to build a client's retirement portfolio, strengthen it, give it a lot of backbone, where they're making more money being retired than they ever could have imagined. And so this is something that I wholeheartedly am grateful to be invited on your program to talk to you about today, because this is a secret that is really unknown. I will tell people all the time, the mortgage business itself is, to some degree, a blue ocean. Not too many people know about it. I've talked to attorneys who don't even understand this. I've talked to accountants who don't even understand that you can own mortgage notes. All right. And then when you talk about buying them from commercial banks, that's a whole nother discussion that people didn't even know could take place. We buy them from banks, we buy them from hedge funds, we buy them from credit unions, and of course, private sector companies that offer them. But the beautiful thing about this is once you learn how to buy them or become an investor into them, whether in a fund or buying them yourself, your wealth continues to go north. It can only go north. I have dear friends and investor friends during the pandemic. They doubled down during the pandemic because things were coming down. So they started buying as they're going down. Believe it or not, it went down further. I have some dear colleagues of mine who lost significant proportions of their retirement portfolios using these strategies. The beautiful thing about the mortgage notes, why I say this is a fantastic way to, using your term, make your money work twice as hard,
Right.
is that the mortgage industry was not affected. The foreclosure statistics stayed very low during the pandemic, 2019, 2020, 2021, 2022.
Those people want to stay in their homes. Yeah.
It's beautiful. It's absolutely beautiful. So congratulations on this presentation today. Boy, I'm excited. You have me pretty excited here, Didi. I'm very excited about this because I very seldom get a chance, rarely, to talk about the beautiful, wonderful avenue of utilizing a insurance policy, whole life to be exact, whole life now, insurance policy, to then extract money as a loan to invest into this particular business sector or this space, the mortgage space, and have a double multiplication on their funds. It is phenomenal. And I want to tell your viewers, the younger you are, you need to get started. You're in your 30s, your 20s, even in college.
Do it.
You need to start. Buy insurance policies, get going now, and then give me a call or give Dr. Cashflow a call to invest into the mortgage loan industry. We'll be happy to assist you.
That's right. So
Absolutely.
we thank you so much, Mr. Carlo, for coming on the show again with us today. And if you all are looking for a properly structured whole life insurance policy, please click the link below and let us discuss what it is that you need to do in order to attain that. What are some of your goals and desires? And as Mr. Carlo has told us, you may have money or you may not, but let's just look at your whole plan and we'll assess where to go from there. Thanks so much for joining us. Happy investing.